Real estate is America's favorite long-term investment, but it has one hidden flaw, and most people only find out about it at the worst possible time, which is the moment they need to get their money back. You see, where I grew up, everyone did the same thing, which is as soon as they got a little bit of money, they go ahead and buy an apartment. But nobody ever explained why. It's just a thing that grown-ups do, apparently. And if you ask the average American what the best long-term investment is for over a decade, the answer has been the same. Real estate, not stocks, real estate. But is it actually a smart investment? How much does it really go up over time? And how does it compare to putting that same amount of money into the stock market? And if it's such an obvious choice, why do so many people who own property tell me that they will do it differently if they started all over again? You see, most people never ask those questions before they buy. They simply buy because everyone around them is buying real estate. So today, we are going to take a proper look because America's most popular investment has a flaw, and it's not the one that you're expecting. It's not about housing prices. It's not about interest rates. It's not about bad tenants. It's something almost nobody thinks about before they invest, and you only find out when you need to get your money back. So I'm going to break down three things. One is, how easy is it to get started? Two, how easy is it to exit the investment? And three, what it costs to actually do that. So a quick introduction, my name is Zack, and I'm a wealth management and financial planning professional. I've been investing for over 10 years. I grew my own investment portfolio to the millions, and I also coach over 2,000 high net worth investors. So let me walk you through it. There's one thing I want to say before we get into the research itself, which is that in general, when you start making money and you've got some capital sitting on the sidelines, there are a lot of good options in front of us now. You can get into gold, you can get into the stock market, you can get into property investing, and honestly, people have built real wealth down every single one of those paths. So in this video, I'm not going to be saying that real estate is a bad investment. I'm just simply trying to show you the pros and cons of each of these opportunities so that hopefully you can pick the one that better fits where you actually are in your situation. So real estate does have a lot of positives, and number one is probably the most common thing that people say is that real estate is physical. It's right there in front of you. You can stand in it, you can touch the walls, of course you can live in it. And for a lot of people, the feeling of owning something physical and real, it's worth a lot. The other thing is that it can pay you twice. The property can go up in value, and you can also rent it out for income while you're holding it. And then there's also the leverage part, which is very big because you can put down, let's say, $100,000 to buy a property that's worth $500,000. So when that property goes up 20% in value, you're not making 20% on your $100,000. You're making $100K because the whole $500,000 went up in value. And that can genuinely be a powerful thing. So that's the honest case for real estate investing. But here is the uncomfortable part. Over the last 40 years, investing in the stock market has averaged around 11% a year. And over that same stretch, the US prices have grown at roughly 4 to 5% a year for houses. So on price alone, stocks have grown at about double the pace. And over the last 30 years, that gap works out to stocks moving around 4 times faster than home prices. And real estate investors will tell you that's, of course, not the full picture. There are different areas that grow faster, and because you can have rent coming in, you can use a mortgage. Anyway, there's so many different ways to increase returns on a real estate investment. But here's just what I would say to that, because I talk to a lot of real estate investors and they're doing all kinds of investing, flipping, managing, rentals, and almost every single one of them tells me the same thing, which is that it's a lot of work. Sometimes there's an issue with the roof, sewage system, tenant issue. There's a lot of paperwork involved to doing these things. The contractors are annoying to deal with. So yeah, if it added up to a similar return, you're working so much harder and dealing with so many more things to actually get to that return. And from my perspective, if there's another path I can go down that gets me to a similar return, maybe slightly better, without doing almost any of that work, then to me, that is just a better path as an investor, unless you are attached to the idea of owning something that you can physically touch. So that's really the trade-off that people make, and it shows up in 3 places. Let's say that you decide today that you want to get an investment property. How easy is it to actually do it? Because getting excited about making these investments is very easy. Everyone is happy to let you in, the agent's happy, the seller is happy, but then the reality is the next steps. You need tens of thousands of dollars saved up before you can even have a real conversation. You have to deal with your bank, you have to prepare a series of paperwork, you have to deal with lawyers, finding the right property, communicating with the agent, negotiating the contracts, the fees. So essentially it's months of hard work before you can even do and own anything. Now, if you compare that with the stock market, you can open a brokerage account maybe in 15-30 minutes without serious paperwork involved, no lawyers, no banks saying yes to you, not much permissions involved, and it's fairly easy to get started with almost any amount, whether it's a couple of thousands of dollars or $100,000. So you could easily decide today and be invested in the market by the end of the day. And this matters the most when you're starting out with less capital, because at that point, one of these options is basically available to you, but the other one is just not even available to you yet. Now, a quick thing before we get into the second one, and if you're someone who likes investing, who wants to stay on top of what's actually happening in the markets, I write a free newsletter every single week with market analysis, what I'm watching, what I'm positioning for, and it's completely free. And the link is in the description below, so make sure you sign up. All right, so let's talk about the second thing, the actual hidden flaw of real estate. So imagine that you're living your everyday life, everything is good, everything is normal, but then a major change comes across. It can be even something good like a new career opportunity where you have to move to another place, or another great investment opportunity showing up at your doorstep, but you have to act on it quickly. Or maybe something negative happens where you have to pay for expenses almost immediately. And the question that really comes up now is this: how fast can I find a buyer for my asset so that I can actually exit? Now, if your money is sitting in stocks, the way out is almost always open. Let's just say you want to sell today. With a few clicks, those stocks can be sold and the cash can be withdrawn to your bank account, and you can spend it on whatever you need fairly easily and fairly quickly, maybe within 24 hours. But when it comes to the property market, it's a bit more difficult situation, because right now in the US, the typical home sits on the market for about 2 months before the seller even accepts an offer. Then closing takes another month, sometimes 2 months. So from listing your property to the money actually being in your hand, you are realistically looking at 3 to 4 months of time. And that's when things are going smoothly. And right now, more than half of all homes listed for sale have been sitting there for over 60 days with no offer at all. So yes, selling is definitely possible. And from my perspective, that is the biggest flaw: how much time and complication it takes to exit these investments. And it's the part that you don't really realize until the moment you actually need to get your money back, or you want to use it for something else. So we know it takes months to sell. Now let's talk about what it costs for you to actually do it. Let's say you have an investment property that's worth $400,000 and you decide to sell it. First, there is the agent commission, which sits at around 5% on average. Then there are the closing costs, transferring the title, the legal side, then you're paying tax on the profit, and then there's just everything else that you spend also on maintaining the place the whole time that you owned it. And once you add all of that up, realistically, you're looking at about 10% of the sale price. So on $400,000, that's about $40,000 just to get out, and you're waiting months to do it. And keep in mind that that's only the exit, because owning it costs you every single year as well. Repairs, property taxes, insurance, and all the things that you don't really plan for when you get excited about buying a property. But the moment something breaks, that is your problem to deal with now, and it's all at your cost. Again, when you compare it with the stock market, you own it, it costs you almost nothing to hold. A lot of the time, it's actually paying you a dividend while you're just sitting there. And when you want out, selling it costs you almost nothing as well. So 2 investments can go up exactly the same amount on paper, but the amount that actually reaches your pocket is very different. Look, even though I know all this, I still almost ended up buying a property for myself. When my net worth crossed $1 million, the first thing I did was I called my billionaire mentor and I told him, hey man, I became a millionaire. I'm so happy right now. And then I asked him, so what do you think I should do now? I heard property is very safe. Is it a good time to start diversifying my portfolio? Should I get like my first apartment? And then he ended up telling me basically the exact opposite of what I expected to hear. Because what he said was, you need to focus on the thing that made you your first $1 million. And you keep doing that until you get to 10 million. And honestly, when I heard that, like, I knew right away that he was right. Because in my case, I spent years building one skill, which was investing in the markets. And that's the thing that turned my savings into 7 figures. So if I'm thinking about further scaling my portfolio, I should probably just stick with what's already working. So the question is really, who should be buying property and when? And I'm not gonna sit here and tell you what you should do, because everyone watching this is in a completely different position. So let me just tell you how I think about investing in real estate for myself. The way I see it is that there are 2 types of people out here. The first type is where real estate is actually your craft. You like flipping houses, renovating, contractors, the local market, street by street, and that is your edge. Then property is your game, the same way the markets are mine. And keep in mind, that's a job that comes with a lot of work. People also can make serious money doing it, and they earn every dollar that they make from it. Then there's my situation where I got a 7-figure investment portfolio. I am still in the growth stage and I want to get to bigger numbers and I want to get there faster. So I also don't want to be dealing and spending my time with tenants, roofs, contracts. So for me, it makes more sense to wait until I get to the point of wealth where I actually don't care about renting my property out, where I just want to own some cool places around the world. I just want to have, I don't worry about the maintenance costs. This is because none of these are financial issues for me at all. Where all of those costs that I spend on it are just like a marginal thing in my net worth. So essentially, I will buy real estate once I have already made it, and it's not how I want to invest in order to make it. And that's, I think, really the hidden flaw when it comes to real estate. And it's not that the property doesn't go up in value, it's just that getting in, getting out takes months of time, and it costs a lot of money on doing both sides. And if you're still in the growth stage of your wealth building journey, then that's a price that you probably don't need to be paying right now. Anyway, let me know in the comments, have you been feeling the pressure to buy a property lately? And at what stage of your wealth building journey are you right now, and how you're thinking about all this? I'm gonna read all of them, and I'm genuinely curious to see how other people are experiencing this. And again, if you want this kind of thinking every single week, make sure you subscribe to my free newsletter, which is in the description below.